Hello everyone, welcome. Hopefully you are fine after such a volatile beginning of the week, I will say. Okay, it's been a volatile year in general, but with the attack, unfortunately, and with the Middle East tension, things are a bit weird. A strategy webinar today, focusing mainly on some advanced trading strategies. It was supposed to be only swing trading strategies. However, I tried to include a few more, the ones that I consider quite significant and quite nice ones. Not in a success ratio wise, but in general, like quite straightforward, very clear, not too complicated, and etc. So I would like to welcome everyone. Hopefully you enjoy this session. As usual, this session is being recorded, so all the attendees will receive the recordings in your inboxes. Please check always the spam or junk folder. Occasionally your inbox might find it like a spam or something, so please have this in mind. So just a second, because the screen froze. Let me check what's going on. Okay, now it's okay. Perfect, we're good to go. Okay, let me go through the disclaimer wording as usual. Any questions? We have a question box. Please give me a quick feedback regarding the audio as usual, just to make sure that everyone can hear me loud and clear. And we're good to go. So this material provides general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products such as users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure in our website. Cool, we're good to go. Let's move on. Webinars@adriafm.com, the email address in case you need it. Let's skip myself. Advanced trading strategies. This is what we're going to cover today. Momentum reversal strategy, trading strategy, Heiken-Ashi, as a short-term one. Raw reversal day trading strategy. And any questions, feel free to let me know throughout our webinar, of course. So today we're going to go through, as I already mentioned, some trading strategies that are quite useful and are used successfully actually every day from a lot of market participants. So having in mind that the main chart patterns are associated with this trading strategies that we're going to check today, is the chart patterns. Okay, so instructions, we're going to go through all the instructions for implementing these strategies. We're going to take it one by one, step by step, and then I will tell you how to manage your trading risk to stay in the game for the long haul. So learning to use, implementing the trading strategy helps you to limit any possible losses by 63% immediately. And obviously to increase with this way your profitability chances in the long run. Just a second. Sorry, I'm back. There was some outside noise. I sorted it out. So, first of all, very, very briefly, just to clarify, in order to be everyone to be on the same side and to be fully to all to be on the same side, basically, in order to bring some clarity in regards to the topic. What we mean by advanced trading strategies, the name says it all. I think advanced, it's mainly for intermediate or advanced traders. Okay, if you're a beginner, I will dare to say that you're in the wrong webinar, unfortunately, because you need to start from the very basics. Because just you will reach that level, you will reach the level to be able to use an advanced trading strategy. The thing about advanced trading strategies in general, there are plenty, by the way, it's not the ones that I will present today only, but the thing is that it's a bit more complex. It's a bit a bit more complex. Okay, it could, some of them I'm gonna let you know which ones depend on the are giving some better results on the long term and some on the short term. I will let you know which or which of those could be applied in every single time frame, but but they are a bit more complex complex strategies. Obviously, like every single other strategy in general, like every trading plan, trading strategy it has built upon existing rules involving complex data and signals, some particular opening position levels, multiple position levels. You can multiple positions as well. So this is what we're gonna go through today. We're gonna check also the timing of the trade. What I mean by that, you need to consider that timing the market is crucial. Okay, is crucial. We need to have a particular parameters in place in order to time the positions that you might consider taking. Advanced trading isn't an inherent superior. Okay, simplified strategies can yield equally good outcomes. Okay, but for every single trader person, there are things that we do like, we don't like, I feel comfortable with, I don't feel comfortable with. So each one of you should find the strategies that he prefers. So what else? So obviously some of them involve several technical indicators, okay, in order to identify ideal price levels, either exit levels or entry levels or stop loss levels, etc. These trading strategies also require close monitoring of the market, especially there is an expertise in the Forex. That's why I said initially that I have picked the strategies that are mostly used by traders who have experience in the Forex market already. Okay, let's move on. Perfect. Okay, let me sort out a bit my... Is everything okay so far, guys? Are you all in line with what we... Okay, we haven't really, this is the very first strategy that we're gonna cover, but everything okay? You can hear me, you can see my slides. Is everything okay? Okay, let me know in the question box if you need any, if there is anything that you're struggling with. Okay. Okay, momentum reversal trading strategy. Okay. Firstly, let's start with this one. Just a second. It's okay. Barack is saying welcome. Once again, welcome. Just a second to sort a bit my slides over here. It's driving me crazy. Okay, momentum reversal trading strategy, the very first one to be covered. Okay, so this strategy aims basically to help the trader finding some trading opportunities through the combination of fundamental and technical analysis. Okay, so it's a combination of fundamentals and technicals. That's why you might consider using the COT, Commitment of Traders report in combination with this strategy. So this strategy requires a trader to analyze the fundamental aspect of the trader currency in order to establish a mid to long-term trend first. So I'm not saying that is a medium to long-term trading using this strategy. I'm saying that before applying this strategy, what it requires you to be fully informed regarding the fundamentals that could affect or have already affected the asset that you choose to trade in the medium and the long term. So for example, if you wanted to trade US dollar index, you should be aware of what happened last week, which US economic releases affected the dollar, what economic releases we have seen so far this week. Remember retail sales just yesterday, how they have affected the dollar, and how is the dollar, what's the overall trend of the dollar, the long-term trend of the dollar, due to these fundamental events, not only the economic data releases, but also the fact that nowadays the market is pricing in a rate cut from the Fed for November. That's why the dollar has been seen to the upside the last 2 weeks, even though we've seen a bit of a stability so far this week. So once you pick the asset that you would like to trade, you need to be familiar, to be informed with everything that might impact it, or it has already affected its prices. So this is fundamental, the fundamental aspect of the asset that you would like to trade. Okay, then what this strategy is all about. First, it was the fundamentals, so you need to be well informed. Then it uses the price momentum, so the support and the resistance zones, in order to spot any market reversals. Okay, so with this way, the strategy allows to the trader to enter the market at low risk and provide a large profit potential through advanced money management. Fourth, all trades are planned in advance. If you are willing to try this strategy, all trades are planned in advance. You shouldn't take any further trades if you haven't planned them in advance before opening your positions. All trades are planned in advance in order to give you enough time to enter the market every time. So also, most trades are pending limit orders in order to be executed during the London session or the US session. So using this strategy, once you do your homework, let's say the fundamentals, spot your momentum, find out your support and resistance levels in order to spot any market reversals, then you will proceed with your money management and risk management, obviously, where how much you're gonna risk per trade, what will be your risk and reward ratio, and etc. And then you're gonna place pending orders, pending limit orders, in order to be executed automatically once the price, once the asset, once the asset fix the price that you have placed in your pending limit order. Most trades, based on all in this strategy, are actually often executed during the London session or US session. It depends on what you are trading, but mainly on the London session. So the strategy also works well on all major US dollar crosses. Okay, it generates between 1 to 5 signals per month, and have in mind that all the trades are entered and held for anything up to several weeks, depending on the price action and the market fundamentals. If you want to try this strategy for a day trading or intraday trading, then it requires some adjustments. Okay, we're gonna see later on. So have in mind that this is a very old trading strategy. It has been traded in live markets for the last for more than a year, actually many years, not more than a year, and its performance is clearly documented as well. You can search about it. If you Google momentum reversal trading strategy, you can see also documents regarding the performance of this strategy. So what does includes? It is it includes, it's included, it is using stochastic oscillator in multi-time frame. That's why I said if you want to try it in a lower time frame, you need to do some adjustments. Okay. Support and resistance levels that you're gonna write down and put your trend lines on, and Fibonacci retracement. This is how it is from what it's involved. It's what the strategy uses as its main indicators. So just these three, nothing else, nothing more. After establishing your bias and long-term trend through commitment of traders report, it's time for you to switch back to the daily chart and look for the price reversal phase. Also, this is the key questions that you need to question yourself before taking a decision. Let's assume that you wanted to trade the dollar. Okay, you need to check yourself, to question yourself. Is the dollar clearly falling or rallying recently? Is the daily and weekly stochastic indicator presenting an overbought or oversold condition? Or in the daily chart as well. Is the price trading around a support or a resistance zone? So these are the things that you need to find out when you go through the weekly and then the daily chart, because in the weekly and the daily chart you're gonna spot the long-term support and resistance levels, and you're gonna see the overall trend. Okay, to define in general the price reversal, you need to analyze the price by answering these three simple questions. I know, but Andrea, I'm a scalper, I'm a 1 hour trader, I'm a 30-minute trader. Yeah, I fully understand that. But you need to be aware of the overall trend, because you might just join the trend and remember that trends are your friend. I'm just saying that you need to be aware of what's going on in the overall outlook. Okay, so for examples of the price being in a reversal phase over here. So this is a daily chart on the dollar yen. As we mentioned, includes RSI, includes stochastic. So over here in this example, they have been plotted together. Support and resistance zones, okay, and if you wish, the Fibonacci retracement as well. So as you can see, very first thing for you to do is find out the overall, or the, if you prefer, the major support and resistance levels. So resistance levels that the price tried to retest again and again and again, but didn't manage to break them, right? So an example is this one, a very clear one. Another one is this one, okay? Another one, it could be this one as well. Now, support zones. Again, levels that the asset retested several times, but it didn't manage to break them. I'm not going to put support zone this one. Can you see my cursor? No, you can't. I'm not going to use this as a support level. Why? Because it wasn't retested several times. The price came down twice, and that was it. Okay. For me, over here, I will have placed two support levels. Very first one over here, because it was actually ignore that. It's just that, because it tried to retest it for several times. 1, 2, 3, 4, 5 over here, 6 over here with this huge tail, 7th over here. So that was a nice support level. And the very next one, it was indeed this one. Why? Because it retested it the very first time over here. But then after, I don't know, 2 months, I don't know how long this is, it tried 7 consecutive days for 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive days to break it, and it fell. Okay, so this is another major support level. So that's your very next job, to spot the major support and resistance zone. You should mark these zones, okay? You should mark these zones because they're gonna help you in the rest of the time frames as well. And these levels could be quite useful for spotting entry levels as well, okay? Okay, the very next thing that you need to check is your indicator, okay? To check to check the momentum based on the what you see in RSI and stochastic. So as you can see over here, okay, the very first time that this area was retested, this resistance area was retested, there was an overbought condition in the momentum indicators. Both the stochastic and RSI were in the overbought territory, but it wasn't only that. It was not only overbought, but also stochastic crossed below RSI, indicating a bearish signal. So there are multiple bearish signals over here. One is the fact that it failed to extend above this resistance zone and came lower. The second one is the fact that both indicators are overbought. And the third one is the bearish cross between momentum and stochastics and RSI. A clear bearish signal indicating that this rally is running out of steam and we're gonna have a reversal, a pullback, a downtrend, let's say. So always, once you are done with your support and resistance levels, check the reaction of the momentum check the momentum by using your the two indicators, the stochastic and the RSI. Same situation over here, both overbought, okay? Both overbought and started pulling back here. Very sharp slope as well. The same stands for RSI, but the oscillator, the stochastic oscillator, is a bit a faster signal than the RSI, so have this in mind. Okay, so the crossing of stochastic below sorry below the 70, it could be the 70 level. This is the 70. Okay, 70. It could be used, by the way, as entry levels as well. So same stands for oversold conditions. Okay. You are using yes. So oh my God, I keep saying RSI. You're absolutely right. You're absolutely right. Thank you for you're right. I was keep saying RSI. However, it's a stochastic, but daily, weekly. Sorry, it's the next setup that I'm gonna use. Sorry, my bad. So with the same, even though, just to clarify, you could have both. By the way, you could have daily stochastic plotted with a daily RSI. Okay, and it's the same mentality. It's the same mentality, but with this way, with this setup, we want to achieve to see the faster signal crossing the faster stochastic crossing below the slowest stochastic, or vice versa over here, the fastest stochastic to move above the slowest stochastic, which is a bullish signal. So again, here it was the retest of this support zone, right? Oversold, retesting this support, didn't manage to break it. It was outside Bollinger's as well. While during the time that the price was like consolidating around this support area, failing, however, to move below it, we spotted that the slow and the fast stochastic, the daily and the weekly stochastic, they were bullishly crossed initially, bullishly crossed. Can you see that over here? And then, even though we have seen some ups and downs from the daily stochastic, however, it held above the weekly one and started eventually to rising. So that over here, here, it was the indication that we're gonna have a rebound. Okay, we're gonna have a rebound of the asset, and that was a very, very strong signal. Why? Because it was ahead of time. If I could drive a line, if it was a straight line, this was a bullish signal where days before the actual rebound. Can you see that? That was the very, very first primary signal over here. And then as soon as the stochastic started pointing higher, breaking the previous top over here, that was the very next sign that we're gonna see a rebound. And indeed we saw a rebound, it get back over here before falling back lower again. So the bearish signal came a bit late. Okay, it was here. Ah, come on, Andrea. You can, it's a straight line, it's somewhere here. Okay. But there was another one at the time that the daily stochastic fell below 70. So another entry level, let's say, it was the time that it crossed below the 70 level. So these are levels that you might consider either taking an entry or placing a pending limit order, and saying that if the asset breaks the below, extends below this X level, open a short position with stop loss that, with target that, and etc. So it's giving you some signals in advance. That's why you can place your pending limit orders well in advance. You have seen how well in advance this one, this signal was seen, this one was seen, this one was seen, and etc. Now, the oh my God, sorry. Okay, so now, let's move on to another example. So this one, where's my RSI? By the way, this is Williams. I haven't placed my an RSI example as well. Okay, seems not. I'm gonna find and send you one, okay, with RSI if you prefer it. But the original strategy involves both stochastic and RSI. So let's move on to the next example. Are you okay so far with this example? Don't worry about it, Michael. Yes, it's daily and weekly stochastic. Otherwise, you can use daily stochastic and to plot on it a weekly RSI. Now, another example of a price reversal, of how to spot momentum, of how you can, of how you can apply this strategy and spot the momentum reversal in order to place your pending limit orders in advance. Another setup, let's say, is with the by using just this is the one that we have already seen, by using Williams indicator. Okay, so here is a Williams indicator. So basically, it's again a ranged indicator plotted from 0 to 100. In this case, is 0 to minus 100. If you notice, is a negative. They are negative numbers. Okay, and over here in this example, we're gonna use this particular indicator, the Williams percentage R indicator, intelligently. Okay, so Williams is not widely used, but it might be the most advanced forex momentum indicator that there is out there. And I don't know why people don't like to use it, but yeah, it's considered to be one of the most advanced indicator regarding the momentum. But by the way, the basics behind this setup is so this setup is basically based. The concept, let's say, behind this setup is that by using multiple confirmation signs given by these particular indicators, gives you more confirmation regarding your decisions to either buy or sell an asset. So these setups, because we use multiple confirmation signs, and as you have seen, it increases the likelihood that it's a high probability trading setup. And also other than using solely the momentum trading strategy, if you notice, we also using over here the price action. So this is what is different from the previous example. We're using the momentum indicator, but also we incorporate the price action, and I'm going to show right now how this is done. Okay, so just very briefly how Williams works. If we have an uptrend, okay, if we have an uptrend, we consider taking a buying position after the momentum indicator reaches oversold conditions. So below 80 conditions is a buying signal if and only if the asset is in an uptrend. Okay, and then the good thing about this setup is that you can time your entry, you can time your position. So an exit level should be once the Williams reaches the above the -50 level. So either waiting until it go further above -50 or close the position, because they're closing the position as soon as it retests the -20 level. Okay. Remember that the real momentum is behind. Sorry. So yeah, what I was. Yeah, so remember that the real momentum is behind a trend. So you need to be absolutely sure that there is a trend, because the real momentum is behind a trend, and the probabilities of a favors more upside prices in an uptrend rather than in downwards downside prices. So let's see now. The asset was in, let's go through this, okay? So the asset was at 1870 territory at its low, starting slowly to move slightly higher, try to correct some of the losses that we have seen earlier, and started doing what? Started posting higher lows and higher highs. What higher lows and higher highs means? An uptrend or an up channel, if you want to name it this way. So it was, so by connecting the higher lows, or by monitoring the higher lows and the higher highs, and this is another higher low, we could say that it is in an uptrend, right? And that's also the reason why we have seen also the Williams all this time, from the day that it started posting higher lows. The Williams was holding above the -50 territory mainly. Okay, so when are you considering taking an entry based on this setup? An entry could be placed, as I said, if you have a clear trend. So we know that we are an uptrend, right? So any time that we see our Williams indicator, for some reason, even though the asset is in an uptrend, for some reason, to breaching the -80 level, okay, like what happened here, not here, that was not overbought, it never managed to breach the -70. That one, it breached the -70, okay, even though it was doing higher lows on this decline over here and this consolidation over here. For some reason, the momentum decreased so much that it breached oversold levels. So this is calling for a rebound. This is calling for a possible buying entry. So when you're going to take a buying entry, if your momentum is oversold while your trend is an uptrend, you can take a buying position once the Williams managed to extend above -50 level. So over here, this one, okay, it could have been an entry level, the move above the -50. If you missed that, okay, if you missed that, then another entry could be taken, or the next option to enter the market is on any rebound away from the -50. So here it was a sharp up, quickly turned down, didn't move below -50, but it rebounded. So that was another chance for you to enter the trend. Clear? It was a very simple one. So in these cases, you should have in mind to set your stop loss at the previous higher low. So either that one or that one, okay? And your target at the previous, multiple targets, actually. You can place multiple targets and you can use as your multiple targets the previous highs. So in this case, this is the target level, this or the tail of it. That was well below it, so it didn't worth the effort, and etc. So that's pretty much it. The next important thing we need to establish is where to place your protected stop loss. Have in mind higher lows, previous higher lows, okay? That's the same example. By the way, just to highlight at this point, feel free also to use trailing stop loss. So below again the previous higher low, I should have put a note over here because this is an excellent higher low as well. So feel free to place your trailing stop instead slightly below the previous higher low. So with this way you're gonna lock profits in cases of a sudden market reversal. Last but not least, the momentum indicator strategy also needs a place where we need to take profits, which brings us to the last step of the best momentum trading strategy. Perfect. Now, have you seen how much that entry could, how much it could, it moved to the upside? So by buying here, a possible target was this one, the previous high, right? Locking, but with a trailing stop, you could lock some profits over here, okay? But you were still on the play because it never fall. It was consolidating for a long, for quite some time, right? For consecutive hours. This is intraday setup, by the way. It's not a daily chart. It's intraday one. So that could have been a target one. And it seems that if you had the target 2 and the target 3 as well, it could keep you in the play for a while because it was keep moving higher. There was a bit of a consolidation over here, but it remained to the upside. So you could have locked some more profit as well. Now, there are also consecutive you can see that there were also consecutive chances. Actually, there were few other opportunities to enter another buying position here, oversold, and managed to break it here. So that could have been a nice entry level. That one as well overbought. You could have added further to the existing buying position or open a new buying position over here. So that particular asset back then, it gave consecutive buying signals that you could either add to your existing position or open more buying positions. Remember that a trend in motion can stay in that state longer than anyone can anticipate. So if you want to maximize your potential profits, you need to let the market tip its hands before liquidating your trades. In this way, you should look for a break in the trend structure. So basically, a break, consecutive higher highs, consecutive higher lows. Okay? Alternatively, you can take a profit once the momentum indicator, as I said earlier, breaks, returns back below 50. So if you wanted to close the initial position and you didn't actually place a target level, then you could consider exiting the position as soon as you saw the momentum, the Williams let's say indicator getting back to minus 50. However, that is a bit, it's not the ideal thing to do. It's better to set multiple targets, lock in some profits, and with this way you can keep the Williams indicator for timing when you are about to close this entry, if you see that it cannot breach the third target, for example. Okay, so there are two different ways to do it. Okay, so for example, if this, you spotted this over let's say a sold condition, you enter as soon as the Williams broke the minus 50 level in collaboration with the price action which extended higher, breaking the previous high. That triggered your attention and you open a buying position over here. So you could either place several targets, either using Fibonacci expansion, either using previous highs. Over here we don't have previous highs, so you could use Fibonacci extensions and etc. Or to exit the entry as soon as the Williams R turns below the minus 20 over here and over here. There are several ways to consider your exit levels, but please define it in advance. Do some testings of the assets to see what is best for that particular asset, to predetermine fixed target levels by using Fibonacci extension or previous highs, or exiting a trade as soon as the Williams R comes back below the minus 20 or comes back below the 50 level. Okay. So note that this particular example is a buying trade, obviously, example using the best momentum trading strategy, and the same rule should be applied for the sell trade. So if you have a downtrend with momentum breaching over both conditions, then you need to use the same mentality, the same rules. Okay. So this is a bearish example, a selling example. Again, same mentality, but in a downtrend we have lower highs and lower lows. So you can use the lower highs as your stop loss levels. You can use your lower lows as your potential target levels or entry levels, and the same exact mentality. Check your Williams, the momentum. Has it breached overbought conditions? Has it crossed below minus 50 or above minus 50? So a move below minus 50 in a downtrend is a call to enter the trend short. While a break above -50, if you have a sell position open, is a call to take profit. Okay, clear? But you see, you need to place your indicators and check how the asset responds, because over here for that asset, there was several times through the back that we could see it moving well above over salt level, sorry, over pot levels, well above over pot levels. So the range was a bit different. It managed to breach up to nearly 0. It managed to breach up to nearly 100. But with this asset in this downtrend, you could see that that wasn't so often. It wasn't often. You could see that was mainly just touching and reversing, touching and reversing, if it was an overbought one. Heiken-Ashi strategy. Okay, one of my favorite, especially for 1 hour trading. So remember Heiken-Ashi, old forms of candlesticks, they're widely used as technical chart indicators, and they basically they are used to visualize price momentum and identify patterns with each candle representing a trading session. So they look similar to the traditional candlestick chart, but the mathematics behind them are a bit different. So Heiken-Ashi is a specific type of candlestick chart. The different regard from the traditional candlestick chart is the fact that it incorporates data from the previous session to show how average values changes over time. So here we have, in the traditional, we have the actual open price, close price, high price, low price, but with the Heiken-Ashi, we have the average values of the previous session. Okay, so we have the open, the high, the low, and the close values, but the average ones from the current and the previous trading session. So it's a more weighted candle. Because of this difference, the difference that it's a combination, it uses a 4 price averages, open, high, low, and close values. For that exact reason, it results to candles in a lineup. So if you closely check, you can see that each Heiken-Ashi candle is lined up with the middle of the preceding one. Okay, instead of the close of the previous candle like the traditional one. So these are very straightforward. They could be applied in a 30-minute chart, the 1 hour chart, and etc. Very, very useful also for day trading as well. Feel free to try them in multiple targets at multiple time frame. Michael, anyway, this recording is saved in YouTube channel. You're gonna receive this recording in your inbox. So basically, the multiple stochastic thing is using in your actual daily chart to use a daily stochastic and a weekly stochastic plotted together. So let me try. Oops, just a second. Sorry, just basically you need to change the visualization settings of your stochastic. So instead of having it to all time frames, try to have selected only the daily and the weekly one. Okay, this is the only thing. It's the same way that you're placing your indicators, but you just merge them. How can we say that? So let me scale it as well. So okay, I'm gonna show you how in a bit. Let's continue with the rest of the strategies, and I'm gonna come on that in a bit. Okay, so yeah, hi Kanashi. I'm gonna just quickly skip the theory of it and go straight to examples. It can be combined with stochastic at the bottom. No need for daily and weekly this time. It's just the default stochastic indicator. Okay, the default one. So the default one has two lines, right? The default one has two lines, the fast and the slow. So as soon as you notice, since you had consecutive, let's assume consecutive bearish candles, as soon as you notice a bullish one, that will be the very first sign that the trend is about to change. So you have to go down to your stochastic and check if there is any bullish sign. Of course, there was one over here, the fast one above the slow one, and the confirmation came 2 days after, with the crossing of both fast and slow above the 20 level, which is the oversold barrier for stochastic. So this line that I have is the 20 level. So both lines started moving above it, with two consecutive bullish candles, high candles as well in my actual price action, and that was a confirmation that we're gonna see an uptrend from now onwards. Be careful for false signals. What is a false signal? That's a very nice false signal. First of all, there was a pause of the bullish trend with this doji candle over here and this another doji one over here, bullish, bearish. So some consolidation is what we are seeing over here, and some mixed performance. Okay, that double bearish signals, however, bearish candles, is a false signal. Why? Because if you go down to your stochastic, you could see that it retested the 80 level, which is the overbought barrier, but it never managed to move below it. So the price was showing some kind of a weakness. It was showing that the price might kick a ceiling, and we might see a reversal, but we couldn't say that. But stochastic wasn't giving this impression. Okay, so that was a false signal. Make sure that your stochastic is giving the same signal as your price action. If they presenting two different things, then don't take any entry. So an entry to go short, it came many days after, over here, when we had 1, 2, 3 consecutive bearish candles with long tails at the bottom, but also we had the decline, the sharp decline of our stochastic lines below 80. Okay. High Kanashi are very straightforward. Yeah, more examples over here, consolidation. And this is where we had the entry level. Remember that you can either use as exit level the change of color. So the fact that from a red one, now we had a rebound and it closed bullishly, that could be used as an exit level, or you could use the indicator as your exit level. If it breach overbought condition, oversold condition in a downtrend, you can close your trade. If it breach overbought condition, sorry, if it reach over in downtrend, if it breach overbought conditions and turns higher above it, then you can close the position. In an uptrend, if it breach overbought condition and as soon as it started moving below the 80 level, then you can close your condition. Or you can just predetermine your target level or use trailing stop. That could save you a lot of time and a lot of worry and anxiety. Another way to combine Heiken actually is with the sorry, I'm running out of steam a bit. The accelerator oscillator is another tool that you can use, but don't use them all together. Stochastic, AC as well, William percentage. No, just one. Okay, one and only. Otherwise, it will get too messy and we're gonna give you just a headache, just a real headache. Some rules that you need to follow. Rules and money management rules as well that you should apply in your Heiken Ashi trading. A valid reversal pattern requires 2 fully completed candles on your daily chart. Okay, 2 fully completed candles. Don't take an entry if you don't have 2 fully completed candles. Okay, fully completed. Not in progress, not the second one to be in progress, no. In progress would be the third one. Fully completed 2 candles, either on the daily chart or 1 hour chart, depends on where you're using it. Avoid news. If there is something massive coming up, NFP, policy meeting, etc., try to avoid it, because this particular one it could keep your stop loss level due to the high volatility into the price. Avoid entering market after volatile price swings, or if there is something major coming up. Also, from money management perspective, move position to break even after 50 pips profit. Okay, adjust stop loss at major local lows or highs, or if opposite signal is generated, as we already mentioned, from your indicator. Okay, remember that also trailing stop is also a possibility. Okay, stop loss set at 100 pips if you are in a daily chart. Okay, this is just for the daily chart, but you need to adjust accordingly to your if you are in a if you're going to use it in 1 hour chart, but these numbers are for daily charts. Stop loss set as 100 pips, or some technical levels if you're going to use your Fibonacci levels, if you're going to use previous higher lows or lower highs as your stop losses, and etc. Always advise to implement your own money management rules in advance. Make sure that you know in advance, you have predetermined in advance how much you are willing to risk at every single trade. Make sure that you have predetermined in advance when you are exit level, your entry level, right? Your stop loss level, everything should be predetermined, calculated in order to be aware how much you are risking. Last but not least, role reversal day trading strategy. I'm gonna go straight to the example, guys, okay? Just to save some time. Let me check where is the very first example. Come on. Okay, I'm gonna go straight to the examples. Come on, Andrea, come on. Okay, let me zoom in here. Perfect. Okay. Okay. This chart is showing the classic role of a reversal bounce formation. So if you notice, the first phase of the pattern, okay, is a first of all, you can see that it was this is a resistance zone. The price rejected this key resistance level, so this is a key resistance zone, and we have seen the a breakout move above that resistance zone, but not solely above this resistance low, but above the moving average line as well. After the breakout, there is usually some form of a correction, of a pullback, of a consolidation, and that will tend to retest the previous resistance as the new support. Okay, so have this in mind, that every breakout, key breakout, either a support of a support zone or a resistance zone that like this one, we tend to see the asset trying to correct a bit. So it might be as a consolidation, like moving sideways above the zone, or in this form, slightly up and then coming down to retest this resistance zone that is now a new support zone before rebounding again higher. So a confirmation, a validation of a new uptrend is coming as soon as it does this role reversal bounce by reversing this resistance zone as new support zone, and by breaking the previous high. That's a breakout validation. Okay, this is a breakout validation. It confirms the existence of a new uptrend. This phase over here is wherein the price bounces at the previous resistance level, the so-called role reversal pattern. Okay, and this phase over here is the validation. You see, here we don't have a validation. We have a retest again and again of the same resistance level for months now, but never managed to break it, never managed to move above it in order this key resistance level to be turned into a support level. Okay, so there is no validation of or a breakout whatsoever over here. Over here we have consecutive support areas where the price obviously cannot cross downwards for the time being. I'm not saying that these levels cannot be, this kind of markets cannot be tradable. No, nonetheless, it could be tradable. This support level, the bounces above this support level, the retest that we are seeing again and again, they are role reversal. So they could be tradable as well. So all these retests at support, at this particular support zone, let's say, could offer a buying on pullback strategy in an uptrend. The previous one come on again. So this could be a buying on these rebounds on this, okay, while these ones could be selling these pullbacks on the resistance level. Now, what we have over here? Okay. Yeah, so yeah, this is also another role reversal strategy, but in a different way. Again, remember that as soon as the mentality is the same, you first need to spot any major support and resistance zones. As soon as you do that, if you notice a break away and above this zone, okay, this implies into a possible new trend. So you are waiting for confirmation. You are waiting for the role reversal phase to be over, and then you are waiting for a validation. Remember, after such a breakout, usually the price returns back to the resistance zone, which now is expected to provide some support to the asset. And as soon as we see that, we need to see a rebound away from that resistance level, and we need to see a validation. So what we have over here, we have the break indeed, we have the pullback back to the resistance, but over here what we had, the role reversal phase didn't stay up to the resistance level, but it moved below it before coming back above it again. So that was the phase, the time at which we had a confirmed transition of the resistance level into a support level. It was as soon as it came back here again. That was once the resistance became support on the move above it again, not here, but here. The validation came, the validation of the breakout came as soon as it broke the previous high, right? So here it was a nice entry level as soon as it broke the previous resistance level. Remember, as soon as you see the very first breakout and you have the very first high, you could place a pending limit order. Yeah, a place limit order. And you can use either the previous support as your stop loss level, or you can use again trailing stop, a fixed stop loss, and etc. And target levels, either using previous highs if there are any, or Fibonacci extension. So in this one, you could apply Fibonacci from here to here, and the extension ones, you could use the extension of the Fibonacci as multiple target levels. That's one way to do it. There are 1,000 ways to do it. Depends what kind of indicators and tools you're using for setting your target levels. Let's move on to the next one. That's pretty much the same. Over here we had another breakout, validation, reversal phase, so you could just add on your existing buying position or just open a new one. Over here we have the vice versa scenario, so a selling position in a downtrend. We had a major support level, we had the breakout, we're waiting for a role reversal. The role reversal came here, as you can see over here. You see that? Where's my pen? Here. The reversal came here. Okay. Actually here there was several times there was another roll phase over here as well, but that was enough as well. And the break of the previous high, which is the previous low, which was the validation, came over here. So for me, that could have been enough as well, because we had the validation, we had the roll reversion, we had the validation as well. So yeah, but if you have placed your stop loss above the support zone, you could stay in the game, even though it came back to retest again the support before coming back down again. So it's very important to place your stop loss above the support zone, or if you are in an uptrend, below the resistance zone, in order to stay in the trade if there are consecutive validations, consecutive role reversal phases. And another example, support zone. This could have been a nice support zone as well. Previous support zone, retested, break it. Over here, this is the latest low that we had, came back. So here we have the role reversal, and here we had the validation. So a nice entry will have been this one. Okay, this one over here, because it broke the previous low after having a role reversal after having a breakout validation. Stop loss above the previous support. You can exit either by spotting, you can exit by fixed targets, or finding previous support levels and use them as targets, and so on and so forth. So that was it, guys. I need to call it a date. The multiple target entry levels, or multiple target levels, the multiple target levels with appropriate risk management, risk and money management rules being in place could limit your risk and could maximize your potential profit as well. Have it in mind, risk management and money management in advance before you take any decision. And divide positions into thirds for risk management and increase fail probabilities as well. These are some rules that you can use if you wish to take multiple entry levels. Okay, a setup how you could, if you wish to divide your position into thirds, how you can do it, and what kind of set limit orders you can use, either 20 moving average, 1/3 at the 20 moving average, another third at a role reversal, and the last third into a 50 Fibonacci level. That's just some suggestions that they are widely known, and they are quite useful in this kind of strategy, the role reversal strategy. Okay, so that was pretty much it. We have already, yes, we could we can cover it in the future. We'll have it in mind, Mario Williams indicator. I will try to include it in May's calendar. But if you are in a hurry, visit our past webinars page, and you're gonna find it there. Just search Williams and you're gonna find it there. You're getting the recording in your inboxes, in your email. Yes. In an instance of a breakout of support, shall I sell immediately? It breaks, or after the first breakout candle? After the validation, breakout of the support, should I sell immediately? No, 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 no. You should wait for the role reversal and the breakout validation and then open a sell position. I assume you are referring to a sell, to a downtrend. Yes. Yes, you need to wait for the validation, for the role reversal phase to be presented, and the breakout validation, because it might be a false alarm, Musa. It might break the support and come back above it again and continue above it. I mean, to stay above it for days or something. So you need, in this kind of setup, in the role, in this kind of strategy, the role reversal strategy, after a breakout, you need to wait for a role reversal to be presented, and you need to wait for a breakout validation. Or as soon as you see a role reversal, you can place a pending limit order at the, so as soon as you see, so here, for example, okay, as soon as, how can I clear this mess? Eraser, I want an eraser. Yes, as so this is a breakout, right? No, you cannot sell here. Why? Because it might quickly come up and continue sideways for days and days and days. It might be a false alarm. What you can do is wait to see the reversal phase, which is this one. And as soon as you, so what is the role reversal? Basically, it came down, then it needs to check again to retest again the support level, which is now a resistance level. And as soon as it pulled back away, is turned away from this previous zone, you can place a pending limit order stating that if it breaks below this low, then open a sell position with target above my support zone and target here, here, and so on and so forth. Are you getting it? Are you okay? Musa, are you okay? Have you, did you understand what I just explained? Yes, okay. Okay, guys. If there are no further questions, I'm going to call it a day. I will try to include Williams indicator into May's calendar. If you're in a hurry, please visit past webinars, and you're going to find the Williams over there as well. Have a great day ahead. Take care, especially from the central bank's speeches, and keep an eye on what's going on in Middle East, because are the key drivers right now of significant high volatility over the week. And actually, they are the key drivers of all our safe haven assets, even dollar. Thank you very much. Take care. Have a great day ahead, and see you again within the week. We're going to have another Facebook and YouTube live, this time with my colleague Michalis. So yeah, stay tuned. Thank you. Bye-bye.